Nvidia has just surpassed Apple to become the world's most valuable company again. These tech giants are now in an intriguing race to reach the $4 trillion market cap first. With Nvidia leading, could this be a great buying opportunity? Nvidia stock has made an impressive 57% climb since August's low, and it's been flirting with record highs. We saw a taste of this in mid-November before the stock pulled back 6% back into consolidation. Now, you might be wondering, why the sell-off? Well, Nvidia's earnings was out on November 20th, and selling off before earnings release is incredibly common, but often a massive mistake. And that's something many investors get wrong. Let me explain why. I've recorded this before earnings release. Nvidia has likely gapped up or down by now based on earnings. And if that has happened, it is not something we should be totally surprised about. Looking at Nvidia's earnings history tells us that this stock loves to gap, and usually to the upside. Let's look at this pattern between earnings release. Last August earnings saw a 3.5% gap down, and yes, the stock did decline another 16.5% after that, but it's since recovered with that 57% rally we're seeing right now. This perfectly illustrates why panic selling before earnings often backfires. When you sell out of fear, you're essentially betting against a company's long-term trajectory based on short-term anxiety. May's earnings, well, an 8% gap up followed by a 38% rally. Before that, a 12% gap up with a 30% rally. Even when we saw a relatively quiet earnings period with no gap, but a 9% decline, what followed was a nice 66% climb to the next earnings. And let's not forget that impressive 25.5% gap up before that, which led to a steady 30% climb. This isn't just random data, it's telling us something crucial about Nvidia's behavior around earnings. Those uptrend gaps aren't just common, they're often the spark that ignites momentum into the trend. And when the stock takes a hit or gaps down, it typically gets absorbed into the long-term bullish trend. This pattern suggests a fundamental strength in Nvidia's stock performance that transcends short-term market reactions. The current consolidation isn't just a random sideways movement. It's a potential launching pad for the next big move. Think of it like a spring coiling up, storing energy for the next push higher. These consolidation periods are crucial because they allow the stock to build a new base of support. It's during these times that institutional investors often accumulate positions, setting the stage for the next leg up. If Nvidia has gapped down post earnings and is still within that consolidation base it's been forming since June, patience is your best friend. Wait for the breakout and new all-time highs before making your move. If it has gapped up and broken out of this consolidation base, that is a positive sign of the next uptrend. But patience, don't rush in. Wait for the right entry. The market will often give you multiple opportunities to enter a strong trend. Here's a pro tip many miss. Be very aware of a fake breakout. It happens when a stock looks ready to surge, but instead reverses back into consolidation. I've seen too many eager investors get burnt this way. Their capital trapped in sideways movements for months. My strategy to reduce the chances of getting caught in a fake breakout, I wait for a bull flag formation above the consolidation basis high. A move up, a pullback to touch the high of the consolidation, then the next breakout. That's my entry signal. We've been holding Nvidia since early 2023, riding this incredible 1000% rise. I'm positioned to buy more for the portfolio, but only once Nvidia confirms the breakout and next uptrend phase. And yes, I've also got my exit management ready just in case of the unlikely event that earnings makes the stock go totally south. Protecting those gains is crucial. Risk management isn't just about avoiding losses, it's about preserving your winners too. Now, let's talk about that 10-to-1 stock split that happened in June because it's crucial for 2025. Stock splits can drive up prices for several reasons. First, they make shares more accessible to retail investors. When a $1,000 stock becomes a $100 stock like Nvidia has, more people can invest, potentially increasing demand. It's also often seen as a vote of confidence from management, showing they believe the stock price will continue to rise. The split increases liquidity, potentially attracting institutional investors and making options trading more accessible. Combined with the current base formation, this could create powerful upward momentum as more investors jump in at the lower share price. If Nvidia breaks out and sets new record highs, $200 and beyond isn't just possible, it's very likely. The psychological impact of a lower share price shouldn't be underestimated. It can attract a whole new class of investors who previously saw the stock as too expensive. What's driving this potential? The same factors behind that 1000% growth since 2022. Nvidia's dominance in AI chip technology, strategic partnerships, data center expansion, and consistent financial performance. Their GPUs are absolutely crucial for AI applications, and their partnerships with major tech firms have only strengthened their position. The AI boom isn't just hype. It's transforming industries from healthcare to automotive, and Nvidia is at the center of it all. Their chips power everything from autonomous vehicles to medical imaging systems. Their diversification across sectors provides multiple growth drivers and helps insulate them from downturns in any single market. Looking ahead to 2025, Nvidia's got some serious moves planned. Nvidia recently announced that its latest Blackwell graphics processing units are sold out until the end of 2025, snapped up by the customers including Meta, Microsoft, Google, Amazon, and Oracle. The AI leaders' deep pockets and large volume orders make it difficult for smaller companies to compete and relegating them to a year-long wait. It's too early to know the effect this shortage will have on the tech industry, especially now with the GPU-heavy development of artificial intelligence booming. But it might lead to competitive disadvantages, even a possible black market or an opportunity for Nvidia's rivals to gain ground on the long-time leader. Companies like Amazon and Intel are developing their own AI chips, aiming to challenge Nvidia's dominance in the AI processor market. What may have raised competitors' eyebrows though is that the new Blackwell AI chip is said to be having issues with overheating when connected in customized server racks. The news is that Nvidia is working with suppliers to change the design of the racks to alleviate the overheating issue. Nvidia had already delayed Blackwell due to design flaws that have since been fixed. However, with no reports of Nvidia notifying their customers of potential delays, there is every chance they may still be able to deliver on time. They're also entering the customer CPU market with their first ARM-based high-end processor. This expansion into CPUs is particularly significant as it opens up a whole new market segment for Nvidia. Their Project Groot initiative in robotics is especially fascinating. It's not just about building better robots, it's about creating the AI infrastructure that will power the next generation of autonomous systems. This positions Nvidia not just as a chip maker, but as a key player in the future of automation and artificial intelligence. One aspect that often gets overlooked is Nvidia's software ecosystem. Their CUDA platform has become the de facto standard for AI development, creating a moat that competitors find hard to cross. This software advantage compounds their hardware leadership, making their products not just preferred, but often essential for AI development. Identifying profitable stocks early in the trend like we did with Nvidia is key to creating a successful long-term portfolio. In this video, I'll walk you through the steps to achieve this. Watch the training session to learn how to consistently find top stocks in 2025.